Ever wonder why prices keep rising, jobs come and go, or why some people always seem to get richer? The economy might seem complicated, but today, I'm going to break it down in simple terms, so you can finally understand how it really works and why it matters to you. Welcome to the Financial Frame, where we break down finance and investing into simple, understandable ideas. Today, we're diving into a big question. How does the economy really work? If you've ever wondered why prices rise, jobs come and go, or how money flows around the world, this video is for you. By the end, you'll understand the basic building blocks of the economy and why it matters for your money and your life. Let's get started. What is the economy? First, what exactly is the economy? At its core, the economy is just a system. A big network of people, businesses, and governments interacting to produce, buy, and sell goods and services. Think of it as a giant marketplace, but instead of one street or town, it spans the entire country, or even the world. The economy includes everything from the food you eat, the clothes you wear, to the jobs you do and the money you spend. So, it's really about how people make and exchange value. There are three main groups involved. 1. Households, you and me, the consumers who buy things and offer labor. 2. Businesses, companies that make products or provide services. 3. Government, which collects taxes, provides services, and regulates economic activity. These groups are connected by two key flows: goods and services, and money. The basics of supply and demand. One of the simplest ideas to understand the economy is supply and demand. Demand is how much people want a product or service. Supply is how much of that product or service is available. When demand is high and supply is low, prices go up. Think of concert tickets or popular sneakers. When supply is high but demand is low, prices tend to drop, like sales on clothes at the end of the season. This relationship between supply and demand helps set prices, which in turn affects what people buy, what companies produce, and how much workers get paid. Prices act like signals, telling businesses what's profitable to make and telling consumers how to spend their money wisely. How money moves in the economy. Now, let's talk about money flow. Money in the economy moves in a cycle. You earn money by working or investing. You spend money buying goods and services. Businesses pay employees and invest in production. Governments collect taxes and spend on public services. Banks and financial institutions also play a crucial role by lending money, enabling businesses to grow and consumers to buy homes or cars. When this flow is smooth, the economy grows steadily. People have jobs, businesses make profits, and governments collect enough taxes to provide services. But if the flow slows down, people stop spending or borrowing, the economy can shrink, leading to layoffs and lower incomes. Economic growth and GDP. You might have heard the term GDP or gross domestic product. GDP measures the total value of all goods and services produced in a country over a year. Think of it as the size of the economy. The bigger the GDP, the more the country produces and, usually, the wealthier its people are. Economic growth means the GDP is increasing, indicating more jobs, higher incomes, and more goods and services available. Governments and central banks try to manage the economy to encourage steady growth without letting inflation get out of control. Inflation and deflation. Two important concepts to understand are inflation and deflation. Inflation is when prices rise across the board, meaning your money buys less over time. Deflation is the opposite. Prices fall, which might sound good, but can signal a shrinking economy. A little inflation is normal and even healthy because it encourages spending and investing rather than hoarding cash. But too much inflation reduces purchasing power and can cause economic instability. Central banks, like the Federal Reserve in the US, use tools such as interest rates to control inflation and keep the economy balanced. jobs and unemployment. The economy's health is closely tied to jobs. When businesses grow, they hire more people, leading to low unemployment. When the economy slows, companies may lay off workers, causing unemployment to rise. High unemployment means fewer people have money to spend, which slows the economy further. Governments sometimes step in with programs to create jobs or provide support during tough times. The role of governments and central banks. Governments influence the economy by collecting taxes to fund public services like education and healthcare, spending on infrastructure like roads and bridges, creating laws and regulations that affect business. Central banks manage the money supply and interest rates to keep inflation and unemployment in check. For example, by lowering interest rates, they make borrowing cheaper, encouraging spending and investment. By raising rates, they slow down the economy to prevent overheating. So, that's the economy in a nutshell, a complex system made simple by understanding these building blocks: how people, businesses, and governments interact, the balance of supply and demand, the flow of money, growth, inflation, jobs, and policy. Understanding the economy helps you make smarter financial decisions, whether you're investing, buying a home, or planning your career. Remember, the economy isn't just something you hear about on the news, it's something that affects your life every single day. It shapes the prices you pay at the store, the interest rates on your loans, the opportunities available in the job market, and even the value of your savings over time. Whether you're deciding when to invest, trying to understand why rent is rising, or planning your long-term financial goals, knowing how the economy works gives you an edge. It helps you see the bigger picture behind the headlines and make smarter, more confident choices about your money and your future. The truth is, you don't need to be an economist to understand the economy, you just need the right tools and a bit of curiosity. So keep asking questions, keep learning, and know that every step you take toward financial literacy is a step toward real empowerment. If you found this helpful, please like and subscribe to the Financial Frame for more clear, insightful videos on finance and investing. Thanks for watching, and I'll see you in the next video.